These are the cities in America where home prices are about to crash in 2024. Because these cities, they are getting hit as we speak by a colossal wave of inventory and forced selling onto the US housing market that is now causing many sellers to panic. With data from both Zillow and Realtor.com reporting on this rapid surge in inventory. With Realtor.com reporting that housing inventory just hit a high not seen since 2020, with more lower priced homes for sale as well. With Zillow echoing similar sentiments, saying that there's now an influx of sellers arriving just in time for spring shopping season in the housing market. And ultimately, this inventory surge is what a lot of you have been waiting for as home buyers and real estate investors. For instance, folks, I want you to take a look at a lot of different states on this map. We're going to cover a lot of different housing markets in this video, so make sure to stay tuned. But we're going to start with Florida, because what we're seeing in Florida right now is absolutely crazy. The for sale inventory figures are going up like a hockey stick. Check this out. We now have 131,000 homes on the market for sale in Florida, when 2 years ago in March, it was only 35,000. So the inventory has quadrupled. Think about that, everyone. 4 times more homes for sale than 2 years ago in Florida's housing market. That is now causing a housing downturn, and prices in Florida are dropping and dropping fast in many different markets. With a similar story playing out in some other states as well. And as this video goes along, I'm going to track this inventory data in different states and cities so you as a home buyer and investor can understand where home prices are heading in your area. But first things first, we got to talk about a simple reality on the housing market right now, everyone, and it's an unfortunate reality. It's the fact that prices are still really, really high. Home prices in America, they haven't gone down as much as I would have expected them to at this point. On the existing home sale resale front, prices are only down about 6% from their peak. Meanwhile, on the new home front, prices are down 20%, which is more of what you would want to see. And what I fear is happening right now is that due to these slower paces of price declines, we're seeing a lot of people now say things like, oh, the housing market's never going to crash because it hasn't crashed yet. We're seeing a lot of people say actually now that home prices are going to go up actually instead of go down. And we now have people like Barbara Corcoran, who's famous for being on Shark Tank. She's famous for founding Corcoran Group, the realtor group in New York City. She's now going on Fox News saying that housing prices are about to go through the roof.
Prices are going to go through the roof because everyone will come out and buy. There are probably 10 buyers on the sidelines waiting for interest rates to come down that are actually active in the market. So everybody's going to charge the market. And so if you wait for interest rates to come down by another point, I don't think you'll gain. I think you'll wind up paying more, because I wouldn't be surprised if real estate went up by another 8 or 10% if interest rates come down.
And so this is the mentality that's actually growing more and more out there in the kind of the financial news and housing sector. People like Barbara Corcoran saying prices are going to go up because allegedly there's 10 buyers for every house on the market that are just waiting in the sidelines for mortgage rates to drop by a little bit. I mean, you guys can let me know in the comments section whether you think Barbara Corcoran is right. But ultimately, my fear is that lots of people are listening to stuff like that without looking at the data. And lots of people are missing the fact that inventory is exploding. It is literally exploding right now in many states across America. And that exploding inventory is telling you that the market is shifting down. And what's crazy is that for the longest time, low inventory was the excuse that many people who were bullish on the housing market used to say that prices would never drop. I mean, you guys can let me know if you heard that over the last 2 years. Realtors saying inventory is low, prices will never drop because inventory is low. Well, now many of these realtors in a state like Texas are conveniently ignoring the fact that inventory has tripled in the last 2 years. There's 90,000 homes for sale. That's the second highest level for March in the last 8 years. Meanwhile, we have the percentage of sellers cutting the price now surging up to the highest level in 5 years. So folks, what does that mean about the housing market? If you're in a city or state where inventory is surging and price cuts are surging, what is going to be coming next? Well, I'm going to answer that question for you. A home price crash. And right now, I'm going to do a rapid fire round and cover 10 different cities across America that I think are in the crosshairs of a home price crash over the next year due to the fundamental data on inventory, price cuts, and the home price overvaluation in these markets. Pay attention through this rapid fire round. Let's get started with a market that is rapidly heading towards a downturn. That's Tampa, St. Pete, Florida. For sale inventory in Tampa St. Pete has gone from 3,000 2 years ago to 14,000 homes on the market. I mean, folks, I know I'm getting a little excited right now, but just look at this data. Look at this and look at how the inventory is just spiking month over month. This is data you can access for yourself on Reventure app to make a better decision about buying a house. But not only is the inventory spiking, price cuts in Tampa St. Pete are now at their highest level on record going back to 2017. Meanwhile, this is a housing market that's approximately 33% overvalued compared to its long-term norms, indicating substantial price downside. And so that's the formula we're using here, folks. We're looking for skyrocketing inventory, skyrocketing price cuts in a market where home prices are still very overvalued. That's the cocktail for a home price crash. Now, let's move on to another market, everyone. Dallas, Fort Worth, Texas. We now have 17,000 homes on the market for sale in DFW, which you can see is the third highest for March going back to 2017. Again, 2 years ago, there was only 4,500 homes for sale. Now there's 17,000. No longer is inventory low in DFW. Now inventory is actually significantly above the long-term average at the same time that price cuts have now surged above the long-term average, while home prices are still an astounding 34% overvalued compared to their long-term levels. Now, something to note is that there's pretty big regional differences in DFW and where this downturn is happening. Of course, everyone, that begs the other interesting point that you as a buyer and investor need to make sure you're on top of. And that's the fact that there's big variations in this data by county and by neighborhood and zip code. And so in this video, I'm looking at metro areas in the general metro area, which is really valuable information to have. But really, if you want to make a more educated decision, you're going to actually really have to dig deeper and look at what the data is saying for your county and neighborhood, because this is a very bifurcated housing market. This is the amazing thing about the housing market in 2024, which is actually confusing a lot of people. A lot of people in some neighborhoods are like, no, there's no home price crash. Prices are still going up. But then in other neighborhoods, people are like, yeah, prices are dropping. And people can't seem to agree on that. Well, in fact, both sides are correct. There's neighborhoods right now in America where home prices are still surging. There's neighborhoods where home prices are crashing. And the things that explain those differences are the inventory levels, the price cuts, and the overvaluation percentage. Now, another market that I really think is in the crosshairs this year is Nashville, Tennessee. We can see the inventory in Nashville has spiked up to 6,200 homes on the market in March, which is about 4 times higher than it was 2 years ago in March 2022 when I started to give some warnings on what was going on in Nashville. Since then, the inventory is quadrupled. All the level of price cuts is now at the second highest level on record going back to 2017 in a market where home values are still 30% overvalued compared to their long-term norms, indicating significant downside. Now, another market, everyone, that is really in the crosshairs as well, and we're going to get to more and more of these cities, so stick with me if I haven't gotten to your city yet, but we're going to have to go through these one by one. Another market that's really in the crosshairs is Phoenix. As you can see in Phoenix, the March inventory levels, we're now up to 13,400 homes on the market in March. We haven't seen this high an inventory level since 2019. And again, this is a consistent trend, and Phoenix inventory is tripled from 2 years ago, while price cuts are at 30% of all listings with a price reduction well above this long-term average in a market where prices are still about 23% overvalued compared to long-term norms. So Phoenix has actually already had somewhat of a correction that you could see here, folks. Like in Phoenix, the market was 36% overvalued 2 years ago. Now it's 23% overvalued. So there's already been somewhat of a correction. There's still likely to be a further correction due to these overvaluation levels. And what amazes me is actually how there's lots of buyers and sellers in these markets that I'm covering who are completely oblivious to the data that I'm showing you, who are clueless to this data. I mean, I keep hearing stories out of certain housing markets like in Florida and Texas where people are still saying that inventory is low and that the prices are still going up and that they think the market's going to continue to appreciate. I mean, that perspective is insane in light of this data. But unfortunately, most people don't have access to it. Most people are just repeating whatever the narrative is that the local realtor spews or whatever headline they see on CNBC. And what I don't want is for you guys out there to get caught up in that, right? Let's not get caught up in the narratives that are being spun. Rather, let's look at the data for the city, county, and zip code that you're looking at buying in and make a more educated determination about where the market is heading and if prices are likely to go up or down. And one thing I've actually done on Reventure app to help you guys with this is I've created a home price forecast score. This is a forecast score that tracks the momentum of home values based on fundamental data points like appreciation, inventory, price cuts, and days on the market. This score can be used to project the directional growth of home values over the next 12 months, with a score below 50 indicating that future home values are more likely to decline. So the reason that I came up with this score, everyone, is because I know that there's lots of data I'm talking about here. And maybe the average home buyer and investor, you don't want to necessarily look at all these data points. You want a simple indicator that helps tell you the direction of the market. And so this is what this data point does. And so for instance, if we're in Florida, we're looking at Lakeland, which is in between Orlando and Tampa. Lakeland, this was a pandemic boomtown. And you can see that this was a huge seller's market 2 years ago. The home price forecast score was 76. We were at a 76 2 years ago. Now we're at a 36. We're in a buyer's market now. We're no longer in a seller's market. We're in a buyer's market, with one of the big driving forces of that being the inventory levels. We now have almost 4,000 homes on the market in Lakeland, a level that we've never seen before, at least in the last decade. This is just skyrocketing inventory, suggesting way fewer buyers and more sellers. And I think at this point in the video, it would be helpful for me to show you guys kind of the opposite of what I've been discussing so far. So far, I've been showing you the markets that I think are going to crash. Tampa, Dallas, Lakeland, Phoenix, Nashville. I think the data is saying that these markets are already in a downturn and that downturn will worsen. However, what are some cities where home prices aren't going to crash and actually where home prices could continue to go up? Well, let's take a look at some of those because, if you're an investor, you might want to know not only where could prices go down, you want to know where our price is going to go up. And as a home buyer, you want to know that as well, because buying a house, right? It's the biggest financial decision I think most of you watching this video will ever make. I mean, maybe you're going to spend $400,000 or $700,000 on a house. You want to know if you're going to do that, if it's going to be a good investment. And you want to know that when you buy, you're not going to immediately see the values go down 10, 20% after you buy and your equity get wiped away. No one wants that to happen. That's one of the ultimate nightmare scenarios of being a home buyer. So what are some cities where we can reasonably expect prices to actually continue going up over the next year? Well, if we look at this map of all the housing markets in America on Reventure app, and we look at this home price forecast score, we look for the areas in red, because the areas in red on the home price forecast score are more likely to have increasing price. And you can see these are predominantly in the Northeast and Midwest. Particularly, everyone, a market like Rochester, New York. In Rochester, the home price forecast score is 62. Indicating prices will still go up. And you can see that this is still very much a seller's market. It became a seller's market in 2021. And it's still a seller's market. It is not flipped back to a buyer's market, with one of the big reasons why is that for sale inventory is just in the basement. 666 homes for sale in Rochester when before the pandemic there was 1,800. And so think about this inventory graph compared to the ones I showed you earlier in Texas and Florida. I mean, it's a completely different situation here in the Northeast. Another market with elevated home price forecast score is Boston. In Boston, we are still in a seller's market. The home price forecast score is 56. It's above average, again, due to low inventory. The days on the market is low. Prices there are still appreciating. So we're still in a seller's market in Boston. Prices are still likely to go up. We can see another area, if we head more towards the Midwest where prices are still likely to go up, is Chicago. Home price forecast score of 59. You can see Chicago still very much in a seller's market. Hasn't really improved significantly since 2 years ago. We really need to see this home price forecast score go below this dotted line to enter a buyer's market where it will be more favorable, with again the big issue in Chicago being no inventory. There's 11,000 homes on the market in the metro today compared to 30,000 before the pandemic. So inventory is still down 50-60% from normal. And in that type of environment, we're not going to see prices drop, or at least drop significantly, because if inventory is still so constrained, that means that there's a surplus of buyers relative to sellers, and that there's still going to be upward pressure on prices. I mean, folks, this is very simple when you look at the data, actually. It just requires looking at the data. And in a second, I'm going to tell you how you can actually access this data for yourself as a home buyer and investor, so you can make a more informed decision. I'm going to tell you the data points to look at. But interestingly, another area where prices have actually started trending back up is California. And this is a tricky one, because home prices in California, these scores aren't what I would say great. In LA, the home price forecast score is 53, which really indicates more of a stable market. Not so much like prices are going to go up that much, but we could see something happen in LA 2 years ago as a seller's market, then it became a buyer's market. Now it's becoming a seller's market again due to a shortage of inventory. Same thing actually in San Diego. In San Diego, we could see it was a heavy seller's market 2 years ago. Then it became a bit more like a buyer's market. Prices went down, but now prices are going back up because, again, of a shortage of inventory. But here's again the crazy thing. If we go into San Diego and look at the different zip codes, we can see there's a lot of variation. Like we have some zip codes with home price forecast scores of 65 and 67 indicating upward price pressure, suggesting if you're a buyer, expect prices in these areas in red to continue going up. But maybe some of these areas in blue, the dynamics are different. Prices are more likely to drop. This is a situation even more exacerbated in Los Angeles, where you can see almost like on the eastern half of the LA Metro and LA County, it's red. Prices still facing upward pressure here. But then if we go more towards the center of LA, downward price pressure. And so what I'll encourage you guys to do is look at that data for yourself right now, if you're a buyer or investor, so you can become educated on what's actually happening in your housing market, rather than relying on a million different narratives and a million different news stories floating around. Cut all that out and then head to Reventure app and type in your city. You can look at the for sale inventory levels in every zip code in your city and the zip codes you're looking at buying in. And so we can see this zip code here in Nashville, for sale inventory has gone from 49 homes to 222 homes. Well, on one hand, that's good for you as a buyer, more selection. But on the other hand, when that happens to go along with skyrocketing price cuts in a market where prices are about 32% overvalued, you got to be careful. That suggests prices are going to go down into the future. So you got to make a decision as a buyer and investor. Like if you see this home price forecast score below 50, heavily below 50, and you look at these different indicators telling you why, you got to make a decision. Do you want to take the plunge now and maybe find a better deal like up front, but then risk, that prices could drop more into the future? You got to make up your own mind there. With ultimately my mission being not to influence you guys one way or the other to buy or not to buy, but just to give you access to information to help you make a more informed decision. Because ultimately you need that making the biggest financial purchase of your life in a world and an economy and housing market that's very confusing right now. So head to www.reventure.app. Right now, you can look at data on for sale inventory for free. And then what you can do is upgrade to a premium plan to access information on overvaluation rate, the inventory surplus, as well as the amount of price cuts in the market. Access a premium plan, go to the pricing tab on the main page, and you can see you can select between the monthly pass, which is $39 a month and gives you access to all of this data. What I would actually recommend you do is you go for the annual pass, because this is the best value. It's going to save you 15% on the monthly cost. It's going to allow you to track this data month by month, because I know for a lot of you, this home buying process is something that doesn't just happen in a month or a couple weeks. It takes often 6 to 12 months for you to finally find the house that you want. Well, tracking this data each month is going to help you do that. It's going to help you do that and avoid making a big mistake. So I would encourage you guys, consider the annual pass. Of course, everyone, make sure to leave some comments below and let me know what you thought of this video, as well as what you're seeing in your housing market, particularly if you're in Texas or Florida.